Go ahead.
Hi, everyone. Dale Pinkert here, special guest, Michael Cow, Twitter handle at Urban Cowboy. Are you a John Travolta fan?
Yeah, I'm. That is exactly the old movie that's a play on words on. That's
I
right.
know, but did anyone ever ask you that? I mean, they assumed
Well,
anyway.
People have definitely made the connection because somebody, I think it just like the other day posted that meme to me. I'm like,
Yeah. Yeah, I was an urban cowboy, living in Phoenix, wearing cowboy boots,
right.
with my suit on, and anyway, so Michael, really great to have you.
Yeah, likewise.
You're interviewed everywhere, and you touch base with me after I don't know, you saw something I did on Real Vision or something. It said we have a lot of similar views.
Yeah,
What
that's right.
what I like to do is start with the embryonic part of someone's career and talk about were you always attracted, say when you were in school, that you knew you were going to be involved, or what drew you to the financial markets?
No, actually, totally not. I grew up like in middle school. I developed a passion for computer programming, and I wanted to be a video game designer. I
Oh,
knew
cool.
for sure I was going to be a video game designer, and then I wound up going to college and studied electrical engineering and specifically software design. And then it wasn't until a couple of engineering internships later I found that just being in a cubicle writing code wasn't my kind of thing. And last minute, I think senior year in college, I decided, you know what? I don't know anything about business. I had this really, really naive idea of what business meant. I kind of I figured, okay, Wall Street business, I didn't even know what stocks or bonds were. And so I just did like a pivot and decided to interview. I noticed that there are these firms I'd never heard of, Goldman Sachs, Morgan Stanley. They were interviewing on campus for the IT positions, and I didn't even know that there were these 2-year financial analyst positions. I wouldn't have known what to say in those interviews anyways. So I interviewed for like the IT jobs, figuring, okay, here's a way to apply my trade, exercise what I know, my existing skill set, and then go to Wall Street and learn about, quote, business. That's literally how naive I was.
It's funny, Michael, because when I graduated from college, it was a 75 recession, and I was a journalism major, and there was nothing out there except work for an insurance company. And a friend of mine invited me to the CME, to the Mercantile Exchange. Look, I went to college in Cornfield in DeKalb, Illinois, and I never dreamed that I'd be, trading corn futures. And when I went to the Merc, I even got lost going to the Merc. I ended up.
Isn't it incredible though? I mean, when you see the energy down in the commodity,
that's what happened. Yeah.
There's nothing like it. Yes.
I got off the train at the Mercantile, at the Merchandise Mart, and I'm walking around. That's where wholesalers are showing their lines. And I'm asking people, where's the trading floor? And they said, you're at the wrong place. This is the Merchandise Mart. But you're right. When I got to the gallery and I saw fast markets in the pork belly pit, I just went down to the floor and said, I don't care what you pay me. I want to learn this business.
So did you trade on the floor, Dale?
Later on, but I was, the low end of the cash system, running out orders to the pit, and brokers always paid special attention to the orders that had STP at the end of them. And that's, the block of stops that they'd run, and you'd hear audible roars when they ran them. That's what the algos do.
Now I understand your Twitter handle.
That's it. Stop Hunter.
Yes.
So anyway, too much about me.
I had to clarify. So I spent as part of my training at J. Aaron, I had to clerk in the COMEX gold pit for I think about 2 months. And so I have all the respect for people that work on the floor, because it not just requires mental stamina. I mean, the physical stamina to stand there all day long and just be totally focused in communicating, like the hand signals, reading the hand signals, reading the crowd, and then communicating it upstairs and vice versa.
Not having out trades, all of that stuff. So we were lucky to have experienced that, Michael, because it's not there for younger traders. I think the SIBO is trading VIX futures and options, open outcry, but what a great place we had to learn.
Incredible.
And you started doing IT and probably started looking over at some of the trading going on, and said, maybe it's the markets I've been looking for.
Well, so what happened there was, Goldman has they put you into a training program, even for IT professionals. And I was in a 3-month training program where they kind of taught us the rudiments of all things financial, right? Stocks, bonds, Forex, commodities, etc. And then at the end of the training program, you get, you take a proficiency test and you get drafted into various divisions of the firm. I was lucky enough to get drafted into the J. Aaron group. And in my naivete,
they were big.
Well, in my naivete at the time, I'm like, I don't know anything about commodities. I want to do equities. And I had the gall or the stupidity to ask the senior partner for a sit down. And I said, I don't want this assignment. And she goes, listen, you got handpicked by the most profitable division in the firm. I would take this assignment. She basically said, shut the fuck up and sit down. And I'm like, okay.
Yeah.
So I wound up writing designing the code for like the currency options, the GUI, the interface between like the sales traders and the traders. And at that time I had already, during that training program, I learned very early on, you know what, if I wanted to be a programmer, I should have gone to a company like Microsoft, where at least the programmers are the revenue generators. But now I'm at Goldman Sachs. Now I have an idea of how they're making their money. I want to be a revenue generator. I don't want to be a cost center. So the whole time during my first year at Goldman in the IT group, I was just learning all I could on the side, reading everything I could. And then the serendipitous thing happened where when my currency options module got rolled out 1 year into the job, this is 1992, George Soros and Quantum Fund calls up the desk, asks for a two-way market on a $500 million Deutschmark options trade, right? This is pre-Euro, right? Pre-Euro, right?
Yeah.
And I asked my client, who's the sales guy, whose client was Quantum Fund, to explain the option strategy. He sketches it out on a piece of paper, and he kind of got it wrong. And then I corrected him. And I didn't think anything of the conversation. 2 days later, I get a call from Lloyd Blankfein's counterpart. Lloyd Blankfein and Richard Whitten co-ran J. Aaron, and they're like, Richard said, here you have a knack for options. You want to interview for a position, as on the actual trading desk? And I'm like, yes. So that's basically what happened. How I kind of made the transition 1 year into my engineering career.
You know what? The cream always rises to the top. So you were, recognized for a skill that you weren't hired for. And really, that's a great story, because it shows you, if things are meant to be, you can't stop them, right? So really,
and it's
really
also incredible. I mean, I'm forever grateful to John McPatton and Richard for being, for fostering such an entrepreneurial environment, in those days, right? And promoting somebody from the back office, basically, right?
Yeah, that's an open-minded person. So really, it's a great story. You probably don't tell this story much. It's good to look back and see how far we've come. And you know what? Appreciate the people that opened doors for us that were life changers.
For sure.
I hope I could be that for some people. So let's talk about change and what's going on, and start with the markets. You're really known for your macro, kind of a go-to guy in the energy patch. Isn't that correct, Mike?
Yeah, I guess I mainly talk about macro and energy these days because, I still, even though I officially retired from active fund management back in 2019, I have my investment advisor still open, and I'm still officially a fiduciary on this oil private equity that I oversee. So I don't play fast and loose with the rules. I never talk about idiosyncratic positions on my long book.
Yeah.
But it's kind of funny because because I mainly talk about macro, hence usually my macro hedges. I think probably people think that I'm perennially bearish because I'm always talking about how I'm hedging the long side of my book. But ironically, most of my career, at least in the hedge fund sphere, has been managing long based risk, arbitrage types of trades, capital structure trades. And then now in my own personal trading, it's a concentrated idiosyncratic book.
Okay, you talk about a term that, I'd like to know what it means. You talk about supply demand singularity. Can you explain to our viewers what you mean by that and its implications?
Sure. Yeah. So that's a term that I coined, I don't know, maybe 2 years ago, or maybe even earlier than that, thinking about the long-term, the effects of the long-term capex starvation in, especially in in conventional oil, non-shale. So during the commodity crash, during the oil crash of the period between end of 2014 and through COVID, you had this undisciplined period of shale production, but the capex spigots essentially got turned off for the long cycle projects, which typically have 5 to 8 year gestation periods. And so this notion of a supply demand singularity is where at some point, right, I've been concerned for a while about the potential for even a recession impacted demand number to exceed global spare capacity, where you have a true molecule shortage and OPEC loses control, right? That issue, that singularity scenario, I think there is still a viable corridor for it. But I think if you kind of go to the present, my views to the present, I actually think that the confluence of this global, monetary tightening plus OPEC's premature moves in cutting before central banks are done tightening conditions, I think it's pushed that singularity corridor further out. So I thought that it might hit as early as the end of 24. I think now that corridor of viability gets pushed out to 26, 27, just because there's the forward supply curve for oil is much more elastic now.
Okay, and what's that mean for price?
So I think it just means that because there's a lot more slack in the system, there's a lot more global spare capacity in the system. Even when demand, when we start experiencing an economic recovery to the recession that we're just entering, arguably, then you have a more muted price
recovery.
Yes.
Okay.
Yeah.
All right. So, I know some people are talking about during this risk-off environment that we may enter, and I believe that you're looking for an event like that because you talk about the dollar being a wrecking ball, and you've been talking about the Fed a lot. Something about OPEC cuts and the Fed, where they're working in opposite directions. Is that what you're saying? Because OPEC is trying to make inflation stickier while the Fed is trying to tame it.
Well,
Is that what you
yeah,
mean?
well, yeah, yes and no, because it's OPEC has a problem because number one, I think of OPEC as the central bank for oil, and obviously the Fed is the central bank for the US dollar, right? Ultimately, the central bank for the US dollar is a lot more powerful than the central bank for oil
Okay.
for a couple of reasons, right? Just because of the relative size and clout, right? But
Yeah.
it also, if you consider the two tools that each quote central bank has, the Fed has one tool to fight inflation. It is to tighten monetary
Right.
policy through interest rate hikes. OPEC, its one tool to support its economic objectives is to cut supply. So while cutting supply keeps prices artificially higher than they would be otherwise,
Right.
it also tightens monetary conditions, credit conditions, right?
Right.
And all things being equal, dampens demand. So in supporting their own economic objectives, they also have to shoot themselves in the foot as well, longer
They're
term.
creating more demand destruction.
Absolutely, absolutely. I always think that, like with oil, demand elasticity it's interesting because in the near term it can be very inelastic because obviously if gasoline prices spike 20% today, you're still going to have to drive to work, right? And so it's
Yeah,
very,
that's
very
right.
inelastic in the short
Well,
term.
not as many are want to anymore.
That's true.
And that's a
But
big
longer,
problem too,
yes,
right?
yes. But so that kind of dovetails into what I'm saying. Like longer term, the it's definitely much more elastic because not only are there substitution effects for technology, right, for green the energy transition, but if gasoline prices are high for a long period of time, right, people are going to start changing behaviors. They start
Telecommute.
carpooling, telecommuting, what
Yeah.
have you, using scooters instead of SUVs. I mean, right?
Yeah.
That's the interesting thing about it. So like I think traditional linear supply demand curves are just theoretical, right, for academics and pure economists, but in the real world it's a little bit more nuanced than that.
Okay. So you talk about the dollar wrecking ball. I want to cover the dollar because I want to ask you, I ask a lot of people this. I forgot who said it. Maybe it was Peter Brandt. I'm not sure. But if you get the dollar right, you can get everything right. Do you believe that?
Yeah, I mean, I definitely think that, well, given the dollar, if you think about the dollar's role as a global reserve currency and how much global trade it represents, and pretty much every commodity under the sun is denominated in US dollars. Yeah, that is correct, right? You get the denominator to pretty much everything right, then you can forecast what might happen to the price of things. So
Okay,
I
so
do focus on the dollar a lot.
okay,
Um,
because on this last dollar rally, equities ignored it. Okay, precious metals paid attention to it. Um, Oil paid attention to it. Commodities in general paid attention to the rise in yields and the dollar bounce, but the stock market didn't acknowledge it. And I don't know about you, Michael, but I always have read things about the death of the dollar and the end of it being the reserve currency and China's up next. And for 25, 30 years,
exactly.
the dollar's been dying.
Yeah.
Um, but I haven't seen in a long time as many people concerned about it, the general public, people asking me that aren't even in the industry. Well, in a way, they're farmers, and they asked me to talk about the dollar. And I said, well, just your fear about it and all these articles tell me that it's crowded that way and the dollar's going to bounce. So we've had this bounce in the dollar from par and a half. And the during this advance, gold peaked, silver peaked, a lot of things peaked. Gold's up a lot today and silver a lot. But I'm thinking that this was the most unloved. There still are a lot of dollar bears. I don't think this rally was embraced, and I'm looking to buy this dip around this low 102 range in the coming days or week. That's a buy zone to me. Um, do you think the wrecking ball, this was the first swing and that we're going to pull back, and on the next swing, the wrecking ball is going to hit the building?
So yes, okay. So a lot of people, there's a lot to unpack in that question, because I do think that the calls for there's two different things that we're talking about, right? There's the secular death of the dollar due to it,
yes,
right? Yeah. Due to its displacement as global reserve or what have you, which I agree with you. I totally dispute that, and I think what's brought that issue to light is really the weaponization of the dollar through financial sanctions, Russia, et cetera. But I co-wrote this paper and presented it at West Point in February, talking about actually advocating against the overt weaponization through these sanctions, because it does, on the margins, encourage the search for alternatives. But I think that the underlying trust and liquidity of the dollar-based system is a nearly unassailable moat, given the alternatives right now. And as you very well know, the currency game is a relative game. When these pundits that sell newsletters warn about dollar death, they're almost talking about it in a vacuum, because what are the alternatives, right?
Exactly.
So that's number one. But now let's talk about like the cyclical factors. And even from a cyclical standpoint, I think you're absolutely right. A lot of people have been calling for saying that the 114 DXY print was like the cyclical top. I'm not convinced necessarily that it is. Even if the Fed is on pause now, I've had this notion for a while that I think if you look at the economic zones, the major economic zones, the Eurozone, China, Japan, the UK, I'm hard pressed to see these other central banks out hawk the Fed. And I think just this morning, I saw that given the latest revisions, Germany, Ireland, Italy are already in recession. Last year, Lagarde was, Lagarde's been talking pretty tough and hawkishly. But you have to also remember that last winter, were it not for Mother Nature's kindness in giving Europe, right, a 40-year record-breaking warm winter, there's no chance they would have even been able to hike as much as they did so far. So I think the Eurozone, Japan, certainly, given its yield curve control that they can't seem to get out of, and then China. There was a chart that I tweeted last week about how, throughout this whole cycle, China is the only country in the world that actually experienced deflation. So they're still flogging that dead horse of an economy, which is export driven. And mind you, their customers are the Western consumer, which is just starting to slow down now. So I see the major contenders for currency strength against the dollar having structural issues. And so my question is, even if the Fed pauses, all they have to do is literally pause and wait for the other central banks to wilt first, which is what I think happens. That's my base case.
Well, it's not happening right now because we got some hawkish rate hikes from the Bank of Canada and Australia. What do you think the Fed's going to do? I mean, my view on the dollar is I do think that there's a high probability this was a top, but I don't think most people think that we could rally just have a technical rally, Michael, back to 110, because there might be some risk off in July. The war is heating up. That's something people don't talk about, but isn't it a lot to be an ocean away from a ground war?
Yeah, I mean, I don't
know. There's value in that.
Sorry,
there's value in that. Safety.
Oh, yeah.
Being an ocean away from a ground war.
Yeah.
And do you think that's going to heat up with this counteroffensive? Do you pay attention to it? Is it something?
I do. I do. Although my bigger concern is actually the other side of the world, right?
China.
It's escalation in the Taiwan Strait. That's frankly my even bigger concern. But
that keeps you up at night. We keep poking the tiger in the eye. With congressmen going over there, we're selling weapons to Taiwan. Do you think there's a likelihood of this happening?
It's interesting. Soon? It's interesting about the eye poking. At first when Pelosi visited there last year, I thought, well, geez, this is pretty stupid, right?
Yeah, right.
But when I think about it more, I actually think that there might be a method to the madness here, and it's the deliberateness from a bipartisan standpoint to keep the eye
that's
poking.
The only thing the two parties agree on.
That's right. And the reason is this. I think that there is what I call a gray rhino risk of a bloodless coup type of scenario where there's actually a peaceful reunification. And I call that a risk, not because I'm a warmonger, not by any stretch. I don't want to see kinetic escalation, but I think if the KMT faction in Taiwan is surprisingly pro reunification, and a lot of the senior officer corps of the Taiwan military are KMT. So if there is a bloodless coup type of scenario, and basically Taiwan goes to the CCP, I think that's a huge geopolitical risk, not just for the United States, but for that entire region. You think about the ramifications on Japan, Vietnam, Malaysia, Philippines. So I think there is a deliberate eye poking going on to basically prevent that from happening, right? Okay. Because I think Taiwan, not just because of the threat of TSMC falling into CCP hands, but just where it sits in the first island chain is a very, very big deal.
Yeah, strategically.
Absolutely huge. Yeah. That's why I focus so much on the yuan, on the dollar. So
I know guys that are, dollar bulls that are real bearish, bullish US dollar yuan, looking for continuation of weakness.
I've been on that trade for a while. Yeah. I think that it's in my latest Substack that I just posted last night. I think of that trade. It's a little bit extended in the near term, but I think that that trade represents an interesting amalgam of options, right? It's an option on China's debt bomb, which China is arguably the most levered economy in the world. It's an option on geopolitical escalation. And in the near term, tying this conversation back to oil, I've been saying that there's this Chinese yuan / oil doom loop where if you think about the PBOC's quandary, I love Greek mythology references. You think about the myth of Odysseus sailing between the Strait of Scylla and Charybdis, right?
Yeah.
For the PBOC, if the PBOC is the ship sailing through that precarious strait, on the one side is, all right, you've got a strong yuan, which I call the Charybdis monster. A strong yuan is problematic because being an export-driven economy, right? Right. That's a headwind to economic growth, which is already flagging, right? The weak yuan, which I call the Scylla monster, is the fact that because China is so heavily dependent on importing dollar-based, dollar-denominated oil, at some point, if the yuan really, really weakens, they wind up importing a lot of the commodity-based inflation. Well, because oil has been very, very weak, and because China's been stocking their SPR at our expense, really,
Yeah.
they've effectively nullified that risk in the short term. So all things equal, I think the PBOC, when weighing the two, which direction to steer closer to, the Scylla monster is the less scary monster, right? So I think they absolutely need to weaken and devalue the yuan to help their economy. But in so doing, that creates a very strong deflationary pulse for the world and for commodities at the same time. So in the near term, there's a little bit of a positive self-reinforcing feedback loop, which is why I think also being long dollar yuan is kind of a quasi hedge against oil. Also,
I'll tell you what. Wow, what a great interview! I just put up your page that you have here for people to just at least check out your musings, and I think you're one of the great thinkers in the financial space right now,
I really appreciate
Michael.
that. Thank you, Dale.
And I learned a lot from you, and I could talk to you for hours.
Absolutely.
So
Love to.
I'd love to do it again. Just keep in touch, and I recommend people follow you at Urban Cowboy. That's KAO, not COW. And go to urbancowboy.com and learn about Michael. And I think you're going to have to listen to this interview more than once with a pencil in hand.
Thank you, Dale.
Yeah,
Really,
you dropped enough pearls for what was her name in Leave It to Beaver? Mrs. Cleaver, to string a pearl necklace. All right, so
I remember that show.
all right,
Gosh, I
so
watched that as
I
a
mean,
kid.
enough pearls were dropped for her to have one, and really was an honor meeting you, Michael. And
What a pleasure.
I'm a fan.
I am
And
too. Of you. Thank you.
and you're now a new trading warrior brother of mine.
Right on.
All right. So I know you're going to go take a break and enjoy life. Enjoy your weekend. I'm rooting for you. Keep in touch. And it was a great interview. Thank you for granting
Thank
it.
you, Dale.
All right.
Appreciate it.
Okay. That's Michael Cow. Follow him and do your intelligence gathering. There was plenty of intelligence here.